We've liked some of the big companies, some of the mega caps for quite a while, and actually many of them are multinational businesses exposed to countries around the world. So if you look at the big oil companies, BP and Shell, GlaxoSmithKline, they're not really domestic businesses, so they're relatively unaffected. The market has moved to re-rate those to some extent, partly because the currency has weakened. But our assessment of those companies hasn't really changed. I think the market is clearly looking much more closely at the more domestically focused companies, and those have sold off, and that's where more work needs to be done to try and assess just how severe the consequences could be from the UK leaving the EU. Well, for some time we found the best ideas almost in polar opposite parts of the market. So on the one hand, some of the mega cap companies, the big oil companies, HSBC, Glaxo, they still look good value even after a recently strong performance. On the other hand, we find good value in many of the recovery situations. Some of them are quite small, but businesses where there's a bit of uncertainty today about what's happening, but over a 2 to 3 year view, they have strong market positions and the ability to recover their profitability and improve their prospects. The stock market doesn't really like those types of companies at the moment because they have an uncertain outlook in the short term for profits, and therefore they tend to trade very cheap on medium to long term valuations. So we're finding a lot of interesting opportunities in that part of the market. Well, many of the big companies in the market have fairly good, solid dividend track records. If anything, a weak sterling, and if sterling stays weak, actually boosts the income prospects to the UK. Many companies pay dividends in dollars, which when translated back to sterling is beneficial. Even if they don't pay in dollars, they often earn much of their income in dollars or euros. So weak sterling is quite a positive for many British quoted companies. Set against that, clearly a weaker domestic economy, if we get that for a period, could have consequences for some of the more domestic companies. I think on balance, the overall outlook hasn't really changed for the dividend outlook for the UK, but there will be some areas where it's improved, particularly because of the currency, and some areas where it might be more challenging. You are seeing more volatility at the individual stock level, and the higher the volatility, the more you are paid if you want to write options, the more they're worth. So in theory, it's potentially a better time. The way we approach option writing is very specific, however. We look to write options on shares that we would be willing to sell at the strike price, at the price that's being offered. If shares are quite volatile, they may be a long way away from the price at which we'd be willing to sell them, and so there may not be opportunities. However, if we find a company which has performed well, which is getting close to the level we would be willing to sell it, there could be a good opportunity. And if high volatility comes along, that means you might get rewarded quite well for that. So it can be a good time to do it. But we're not seeing a huge number of opportunities today. We're not seeing that much more than normal. There's probably two big themes that have driven the stocks in the market this year, and also within the portfolio, and it's been you've had a massive divergence between the winners and the losers, between the strong companies and the weak. The two themes have been the weakness of the pound, particularly post-Brexit. So the overseas earners have done very well, and that could be the stocks like Glaxo, United Business Media, some of the oil companies. And the other theme has been security and safety. Because bond yields have fallen, because uncertainty has risen, companies that are seen as safe and reliable, dependable, have been re-rated. And within our portfolio, stocks like Tate & Lyle, which is a specialty ingredients company, that has been re-rated. But other companies, GlaxoSmithKline has also benefited both from the currency and its defensive characteristics. Those have been the biggest gainers in the portfolio this year.